Off to you so I can get off the stage.
Clap for him. Thank you. Thank you. Hello, everybody. Can you hear me? I'm Satya Bajpai. I am an investment banker focused on blockchain as a sector and technology, which includes AI and other sectors. My job is mainly to advise companies, both tech and institutional investors, in making investment decisions, valuing blockchain companies, and raising capital. So that's what I do, and I'll be the moderator for the panel. We'll have three more folks joining us. Alicia and Dave will be joining us soon, but we have Ajay, so I'll let Ajay introduce himself.
Hey guys, so my name's Ajay. I am the founding partner at a venture capital fund called Happiness Ventures based in Palo Alto. And we are a relatively new venture fund, started in 2017, investing in a wide array of early stage, so seed and Series A level companies, a lot of infrastructure and deep tech companies, and we happen to have a couple of companies that are doing some interesting things in and around the blockchain. So looking forward to getting to know some of you. My background, I'm a serial entrepreneur and founder of a bunch of startups, and now have a $500 million fund.
1 second. That's fine. It seems like, yeah, okay, we're complete now. Okay, I guess I'll introduce myself as well. Hi, my name's Alicia. I am one of the co-founders of Starfish Network. We build blockchain hubs and learning networks. We launched our flagship blockchain co-working space / event venue and learning center in San Francisco in April in Soma. And the main pillars of our community are basically a collaborative co-working community with over 20 blockchain companies. We do around 25 monthly industry events with an educational focus and a technology focus. So I'm bringing people together to support each other and learn more about how they can contribute and build projects in the industry. And we have a bunch of peer-to-peer learning networks where developers and builders meet and they work together on projects and teach each other how to do better work. Yeah, that's pretty much it.
I am Dave. So we're starting with intros. So I had a successful exit back in 2013, kind of moved to venture capital. And in India, I was the Internet 3.0 guy. So my area of focus was Internet of Things, cloud computing, and crypto was a very small part of that. But in the middle of 2016, as crypto started expanding, I started focusing purely, I became, where crypto was a small element of our portfolio, it kind of mushroomed and we started putting a lot of focus. So Galaxy is a hedge fund, and we're primarily involved in algorithmic trading and creating mining facilities.
Thanks for the introduction. I think one of the key things that I wanted to make sure we discuss in this panel is about capital raising. And I know it's back of your mind one day or another you will need to, or you're probably doing it right now. And the most pertinent topic here is with blockchain as a technology coming in and the whole ICO and STOs and whatever is coming in the market, the wave of funding for these entrepreneurial ventures has completely transformed itself. Blockchain has disrupted it. It actually has, in some ways, accelerated it as well. So what I wanted is, with our panel, with the sort of unique set of skills that we have here, from hedge fund to VC to building an ecosystem, or I would say incubator in some ways for companies, and me as an advisor to a lot of tech companies, we wanted to talk about this topic and mainly discuss what are the top two key things that you see, and this is for the panel, that they see in their work that blockchain has impacted. Not only that, that will have a long-term impact in the capital raising process. So, Ajay?
Yeah, that's a really simple one as a VC. Obviously, funding sources are more numerous. There's a plenitude of alternatives to VC for entrepreneurs. So you have to consider all of those funding sources and options wisely. And blockchain and cryptocurrencies and token sales are kind of expanding the universe of funding options. So that's one big shift and change. But from the day-to-day, kind of the practical perspective, I think a lot of what has happened over probably the last years, we've seen a lot of entrepreneurs rush into this idea that just by slapping blockchain onto their business plan or into their deck, they can somehow polish off something that was less appealing or attractive without the blockchain stamp. And VCs generally can see through that very quickly. So the advice I'd give to any founders out in the room is if you genuinely have a reason to use some type of blockchain technology or infrastructure, then that's perfectly fine. But if it's not like substantially value adding to what you're trying to accomplish, it's probably a distraction. So just keep that in mind.
So the question was, what are the two things you see?
Yeah, when companies are raising capital, what are the things that you think blockchain is changing for them?
So something that I've seen in the market that I find really interesting is that there's a new set of investors out there. Basically, all the blockchain OGs who managed to hold on to their tokens now have a lot of funding. There are lots of new funds out there, and they have a different mindset. They're risk takers. There are lots of people who are out there on the market now, in the investor market, that are funding high-risk projects, that are funding things that seem a bit crazy, that are built, or seem a bit out there, but where people have the goal to actually build new systems or operating systems for the way we transmit data. So I think that's changed the landscape of funding a lot. So that's not really just the tokenomics of blockchain funding. It's just about a new set of investors being available to people and able to fund new projects.
Yeah, I mean, I agree with you.
Yeah.
I see a lot of companies that are very much social in nature. It's not that they don't have a plan to make money, but they're very social in nature, and they're getting funding in this ecosystem, and that completely aligns with what you're saying, Alicia.
The thing is, basically, if you invested in crypto really early on, you probably have the belief that the world's going to change, or you had a mental model of the world of the future, and then you see that has worked out, at least in part. So you're going to be more prone to investing in new companies that have a different model of how the future is going to look like. So that's really interesting. Number two, basically what Ajay said, there are lots of companies that are using blockchain to raise capital because they think that's an easier way to raise capital. And they see lots of utility tokens that don't really have a lot of utility. So I think that with the recent downturn in the markets, that might have put a halt to those kinds of funding scenarios, and we'll see more practical applications of tokens.
Yeah, I'm gonna second what Ajay and Alicia are referring to here. One of the first things. Hello. Yeah. One of the first things to think about is blockchain applicable here, and is it going to create value by using blockchain? Blockchain, like Ajay said, a lot of people are just using it for the buzzwordiness, but really for any stakeholder, it's important to figure out if this is one of those applications that blockchain adds value with. And we need to use blockchain or versus a centralized way to approach that problem. And the second thing I'm going to add here is that coming in from the hedge fund side of the world, we just like to take positions in different projects, and that boundary between the hedge fund world versus the venture capital world is shrinking, because when you own ownership in some of these tokens, you're essentially also committed long term on the success of that project. But as we move towards a tokenized world, we are going to see that boundary shrinking, and pretty much anybody who has the resources can come in and participate in an investment opportunity. So those boundaries are going to continue to shrink, and I'm sure that you guys have more to add to that.
No, I completely agree with everybody here. And one of the things that I believe when I talk to companies and I look for is, if anybody comes to me and says, I'm a blockchain company, I immediately disregard them, because I don't think any company can be a blockchain company. You can use a technology to provide a better product or service that's available now, but you cannot be that technology. And the differentiator of a good investment versus bad investor, in my mind, and a lot of sophisticated investors look at it that way, is you have to say, this is my story, this is the product and service I'm providing, and since blockchain fits really well in this puzzle that I'm trying to solve, I'm using blockchain as a tool to deliver this product and service, and hence monetize my product. And that is a much more convincing story for anybody who's trying to raise capital than just saying I'm a blockchain company, because that has become old news now. So let me start with another question for our panel, and this is an interesting one. I would like them to provide at least one prediction, 1 to 2 years. If you don't have any, that's okay. What's going to happen in capital raising and in the blockchain industry overall?
Lots of SEC action and lawsuits and people going to jail.
Let's be positive.
I think that the funding cycle and blockchain in the past year it's just been a bit crazy. Really high seed rounds. So we'll get back to normal, and the funding cycle for blockchain companies will mirror traditional funding routes a bit more closely, as in you raise a bit of capital first, then you build something, and then you raise more. Yeah.
So I have this fundamental belief about the world that nobody knows anything about anything. But I'm gonna, since we're in we're in the backyard of Draper University, so I'm gonna make a prediction about Bitcoin, and that prediction is that yes, it is going to go to the moon, but we just don't know the timeline yet.
So 100,000 by end of 2020?
I would say 2019, 2020 is the right time frame. So May of 2020 is when the Bitcoin reward halves, and we're hoping to see a lot more action then.
I'd like to see a world where the dollar is no longer the main denomination of value, so you wouldn't care if Bitcoin is 100,000, because
We're certainly moving in that area, but not. There are a lot of counterfactuals here. So that is a counterfactual reality that Bitcoin becomes the reserve currency of the world. But we're getting ahead of ourselves because there's a lot of things that still need to be proven. There's a lot of good things that need to come out of this space apart from the token plays of 2017 to make that a reality. So we're kind of in the next cycle, and hopefully, with good projects, and we're in general seeing a lot of consolidation. So we're seeing fewer projects with better better teams and ideas that are actually going to improve the world. So hopefully in the next cycle, I don't know what we're going to call it. Are we going to call it ICOs? Are we going to call it security tokens? But we're going to get there.
thank you.
That's a great topic, because what happens to world governments? Who makes the roads when Bitcoin is the reserve currency and the only currency of the world? It fundamentally changes potentially how governments work and operate. So a lot of big questions that have to get answered before that future, but I think it's a lovely idea.
I do see a lot of hyperbole in this industry, no doubt about that. I think Bitcoin and others will coexist. I also think in the short term, ICOs will be lesser and more STOs. And this is just because people are afraid of using the word ICO also. Some people just don't want to use it because there is a stigma to it. STOs are slightly better just because they are regulated. There's a Reg A offering, accredited investors. But I also think a lot of companies are thinking about tokens being actual value in the real world. Right now, a lot of the tokens have really no value in the real world. And I see a lot of my clients and companies coming in and talking about tokens that have real value, be it a part of the house or be it the Airbnb model where you get to use a property for 5 days a year and you get 5 tokens. Every year you can use it for 5 days. So that's just an example. But I see a lot of that happening. That's a good innovation, I think, because it will have better regulatory review, and it will also be more quantifiable when you actually try to value such assets. So that's my take. Anything else that I would leave it open for the panel to talk about that I have not addressed, or anything they want to talk about before we open for the for everybody else?
Just one comment on that. I think there's a lot of conflation between security and utility tokens, and most token offerings don't know how to distinguish between the two, or what utility and security is, and speculators, of course, change the very nature of what a utility token was intended to be. So it's really difficult to kind of, I think, for entrepreneurs to navigate that course right now. And that's where a lot of the regulatory and other issues kind of start rearing their ugly heads. But occasionally you do find interesting companies that actually have a true utility token. I met a founder here, Seva Exchange, who's in the room, and they have an amazing utility token that is built on a fundamental concept that goes back thousands of years, which is bartering for your time. And so there are kind of opportunities to intelligently leverage tokens as a true utility, but most of those are far and few in between, and hence the same conflation you see in Bitcoin today, right? Is it an asset? Is it a utility? Is it a currency? We really don't know.
So on a more general level, money was supposed to be a symbol for the exchange of value, and as time progressed, we went off course. Money no longer reflects all value exchange. I mean, it never really did, but I think that as time has progressed and we have a lot of interactions in our world where there's value exchange, that we're not measuring those. It's not reflected in our current system. So creating new currencies, creating new token systems is a way to correct that. And I think that we will also see that reflected in funds and investing and the investing landscape. A really interesting concept that I came across lately was that you are an investor as you're walking around and you have interactions and you spend your time on projects and social interactions, and you're here right now, you're investing your time. Whatever you do, you're a resource, but we don't quantify those investments, and I believe we will, maybe 5 or 10 years down the line, but that's going to be part of our system.
I'm just going to add that tokenization is kind of the next step after securitization, and it's like a gradual evolution of sorts. If you go speak to a lot of founders, right, they didn't know how to raise capital by themselves. There's really something wrong with the mic here. So, all right. Thank you. So the way I look at the world, I think tokenization is just the next step for securitization. And if you go speak to a lot of founders, at late stage, who are at a later stage in their capital cycle, they would tell you that, at the start they didn't know how to go raise money from, VCs. A lot of people use blockchain as a buzzword to their project because they didn't know how to do that. But I'm happy that tokenization kind of makes it a level playing field where anybody can come in and if you have a good idea and people back you up, then capital would not be a problem, and certainly it won't be hindrance to you growing and creating value for people, which is what everyone should be after here in the first place. So definitely a very, very positive step. We need to reform as an industry and be more focused on quality ideas and not just do a lot of marketing and PR. And I think if as long as we get in that direction, there's a lot to come here that's going to be very valuable for the world in general.
I think we can open up for questions. Any questions from anybody?
Hi, thank you. I have a question that doesn't require a blockchain. If you could just reflect on your personal relationships with, say, the best founders you worked with, what characteristics come to mind? If you have some anecdotes and characteristics to share.
I'll just start because it really is no differentiation. Whether you're a blockchain entrepreneur or you're not, I don't think the things that I look at is creativity, ability to convert an idea into something operational, and just being commercial and street smart are the three things that really work well with most entrepreneurs. But I'll let others speak about it.
I mean, we look at the mindset of the founder very closely. We actually have a whole framework called the Happiness Index, which is designed to help founders self-assess their own state of mind. And it's really a mindfulness exercise and a self-awareness tool for founders to understand the dimensions that could make them a great founder, everything from their resilience and perseverance, their ability to deal with failure, stress, challenge, their approach to growth and abundance. Do they have a growth and abundance mindset where they're constantly learning? Their ability to process and handle feedback and listen sometimes and apply it, and other times, conscientiously object and move forward with their vision. So we look at a number of dimensions. Those are just a few kind of things that we take into consideration because mindset is the single biggest determiner of whether or not you succeed in your startup.
Understanding the value of collaboration, to me, that's the most important part of what makes a founder successful. I think that as we are moving into a more decentralized system and a more decentralized world, you can no longer dominate a market. You can't be the winner. You can't be at the top, but you can be the person who adds the most value to the system, the ecosystem. So founders who understand that and who ask themselves, how can I add value to a large group of people in their, whatever it is, whether it's commercial transactions, whether it's a stack of tech, those are the founders who actually take off, whose companies take off and get a lot of visibility. I see some projects in the space where they have more of a Web 2 mindset, like we want to dominate this market, we want to run the industry, and that just doesn't work anymore. That's behind the times. So understanding where we're headed and how things work these days.
Yeah, they gave me my own mic because I keep screwing up. But I'm going to second to what the panel is putting in together, which is that you have to have a mindset that's focused on perseverance. And I read a tweet recently which said that when the chips are down and you're still working and you don't really care, how the external forces treat you, but you know that you're creating value, you're going to figure out a way to make it happen. And that perseverance, that mindset, that ability to challenge, external pressures is from what I understand, the mark of a good founder.
Any other questions?
Hi, my name is Ralph Chen, and I'm from Casper. I'm asking this question from kind of an outsider, even though I'm in technology field. My question is, for any technology or investment, in order to be widely acceptable and also around interest in the community, in the investment community. It has to be easily understood, and also people can see the future of their ROI, right? The value. There's a roadmap and a future of that. Of course, the technology is a little bit kind of advanced to a lot of people, revolutionary. But my question is, it is very difficult for either technology people or even investor to get excited about it in a wide, in a more popular sense, because it's very difficult to evaluate. There are three factors, in my opinion, affect it, right? One is a lot of negative press, all right, and also a lot of things happening, not very favorable. Number two, the government regulation, FTC or stock exchange or even Goldman Sachs, all right. And then the third thing is the technology is still like in search of application and investor. So how do you, in your opinion, how can the panel address the issue of how to evaluate this technology? Thank you.
You got the question, right? How do you evaluate blockchain technology? I think that's what the
So let me make it clear. Nobody will tell you that you've invested in the right technology. Nobody is going to come in and give you that confirmation. And if you really analyze a lot of startups that did well, and created a lot of value, there's a lot of forces apart from just hard work and everything. There's luck also. As far as negative press is concerned, negative press can be very good sometimes, in case our president, if you want to think about it. But it worked for him. It works for, Uber is the hub of all negative press in the world, but they seem to be doing fine. So my answer to you would be that, you have to, this is a holistic picture that you're looking at here. Nobody is going to come in and confirm that your, the project that you're investing in or, any team is the right solution. You just have to keep stress testing your thinking, and keep evolving, and nothing stays the same. So there is no right answer there. You have to, stress test what you're thinking, and how much of it makes sense, and how much traction can you really generate there.
I think one thing I'll add to that is the whole VC mindset of selective diversification. The point here is that when you have an industry like that where there's a lot of risk, but the rewards can be big, what you have to do is invest in multiple projects and diversify, but with the mindset that each project in itself can be a blockbuster and can make you enough money that it will take care of all your other investments. And having that mindset is important, especially in the blockchain space, I think, because there's a lot of projects that will fail. These are early stage companies. They're issuing tokens doesn't mean that it's an IPO. It's still an early stage investment. So you have to have that in mind.
I second that. Yeah, every investment you make basically needs to return your whole fund as a VC, which is why VCs partly exist, because investors that are asking this question oftentimes don't have the skill set to evaluate and make the investment decisions themselves. And so VCs have historically performed a very important function of providing that expertise to diligence and evaluate investment opportunities. In the world of decentralization and blockchain and tokenization, STOs, things are changing, and retail investors potentially have greater access to investment opportunities and are bypassing the professional investment manager altogether and investing directly. And that introduces a tremendous amount of risk to the individual investor that's participating in that kind of exchange, because they're effectively bypassing the machinery that exists that actually does that, performs that very important function of selecting the right investments and then post-investment managing the outcome and the return on the invested capital. So something to keep in mind. I'm not trying to make a case for centralization here, but I think in the world of decentralization, there's a lot of kind of open-ended questions of how do we kind of continue to implement safeguards and resources to solve some of these central functions that have historically been very valuable.
So the question was, how do you evaluate blockchain investment, right? I mean, on a very basic level, it's not that different from evaluating a startup investment, which is who's on the team, what's the product, what's the roadmap. That's something that I see missing from a lot of projects. So if I meet people who have a project and they have a very clear roadmap for their product to get to the market and acquire users, that's great. And can they execute? A lot of teams are very tech heavy, very focused on the tech. I feel that we're missing. So while that's great, I feel that in the industry we're missing a bit of a focus on like how do we actually bring the tech to market. So those are the things I look at, and then I take it from there.
Can we take one more question, or we are good with? For the next panel? Oh, okay.
Networking break.
Okay, networking break it is. We can take questions after this if that is okay. Yeah. Yeah.
Right. So
Yeah.
basically, we're going to give you guys about 10 minutes,
Thanks.
maybe 15, depending on what's happening in the background, to actually discuss some of these questions that you had, interact people that you know had similar questions. We want to make sure that this was a forum and a place for conversations to really be had. So we're going to give a little bit of time for that instead of having it all focus on just the panels and then what ad hoc happened at lunchtime. So hopefully you guys enjoy that. You guys have 10 minutes. Please don't go far. If we can stick in the room, it might get a little bit loud. That's fine. Enjoy the atmosphere. Enjoy the energy that builds. All right? 10 minutes.
Thank you.
I guess this is how you do it. Take a networking break.
I'd love to come like learn more about what you guys are doing and learn from you guys because
Yeah.
I think you're